Yesterday, the euro-dollar pair reached its yearly high. Traders are becoming more and more confident that the Federal Reserve will switch to a more dovish stance. Notably, hawks are those politicians who support aggressive measures. In the case of a monetary policy, a hawkish course suggests interest rate hikes. Meanwhile, a dovish approach is based on a cautious auctions. Its supporters estimate the economic situation and avoid knee-jerk decisions. The recent macroeconomic data convinced the traders that in the near future, the Federal Reserve will stop raising the benchmark rate. The fact is that inflation is gradually slackening, whereas the labor market is cooling. Meanwhile, the European Central Bank intends to raise the key interest rate by 25 basis points at the next two meetings. Such measures are aimed at combating high inflation, although the price growth has already slowed down to 13-month low. Core and food inflation is still very high. Some ECB's officials suppose that it's better to raise the key rate by as many as even 50 basis points. On the trading chart, we see that the euro's rise against the greenback accelerated after the price exceeded the psychological level of 1.10, and this led to a rise in the number of long positions and an inertial movement. Traders ignored technical signals of about conditions. The next resistance level is located at 1.12, which may trigger a slowdown in the existing upward cycle. However, the expected correctional movement will hardly violate the midterm uptrend. The Bank of England is also ready to raise the key interest rate. Against the backdrop, the pound sterling consolidated above the resistance level of 1.25 against the US dollar, and this fact points to several important technical factors, including the continuation of the midterm uptrend and the rise in the volume of long positions. This, in turn, may boost the British pound higher. Thus, the currency has every chance to hit the area of 1.2670 and 1.2720, which will support the midterm trend and allow the price to climb even higher. However, the alternative scenario is also possible. In this case, the pound-dollar pair may show a correctional movement that will not violate the structure of the midterm trend. The price may bounce if it drops below 1.25. However, the area of 1.2670 and 1.2720 may exert pressure on the long positions and cause a technical bounce. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.